Good morning and good afternoon to some of you, everybody. I'd like to welcome you all to the Daily Energy Markets podcast. It is the last day of November. We're almost at the end of the year and ahead of the season to have a break for most of us, hopefully. So we wish everyone the best there. But let's look ahead, and we've got a really busy podcast this morning, a lot to talk about. I'm delighted to be joined by Peter McGuire, CEO of XM Australia, and Clyde Russell, Asia Commodities and Energy columnist at Thomson Reuters, and we will be hopefully being joined by Robin Mills from Qamar Energy. Let's go to you, Peter, for an outlook on all things sort of prices, commodities, US economy. We're expecting some speech later today from the US on the sort of the proposed next rate hike, which is expected to be 50 basis points. The point of view from where you are in Australia, but again on the sort of latest feeling of where the US economy is at for next year in light of Fed expected policy.
Well, Dyala, I tell you what, it's and welcome to everyone, and hello and greetings from Sydney. Here we go, and it's certainly showtime. The market hasn't disappointed over the first 11 months, and as we bed into December, and we look forward to seeing what the Fed's prepared to do, and 50 basis points seem to be pretty much, the line in the sand. The 50-50 toss of the coin as far as a recessionary fears in 23. So that's where the pundits are saying. So it's an even Steven situation moving forward. And how aggressive is I suppose the equity market rally? Is that going to continue over the next couple of weeks leading into Santa Claus? And maybe it's already started, but I think it's still pretty washy. And then commodities, if we look at the energy sector, and I'm with a couple of experts here, they've been massively sold off, the energy sector. Well, certainly crude has been, and US dollars capitulated. So it's just been an enormous, the last, I'd say 2 months have been absolute showtime for retail traders globally. With that US dollar capitulating, we've had a new prime minister, we've got a new king, we've done a lot of global themes going on, and the uncertainty in China is creating much angst, I think, on Main Street and certainly from retail market sentiment. So Dyala, all I'll say is this: strap yourself in, because I think it's going to be one bumpy ride.
Yeah, okay, well, so it's a very balanced outlook there, right? I mean, the volatility is here to continue by what you just said. It could really go either way, 50-50 on all those points you touched, commodities, equities, again, the outlook for the next 6-12 months, who knows? The only thing that seems to be certain is the Federal Reserve policy, which is kind of indicating pretty clearly, Peter, just staying with you just for a second,
yes.
That next year is likely to be sort of this whole longer rather than higher policy in terms of rates, right? So keep them going up, but not so high. Does that seem to be absorbed now into sort of everyone's considerations?
Well, it's if the inflation number is manageable, and we have seen the headline, we've seen peak, then it starts to trim back from here. Then Dyala, I'd say the answer would be yes. It's going to those little rate rises and possibly even some form of softening, or let's just see where we are by this time next year. But if the inflation rate hasn't hit the moon yet, then that's going to create much angst. And this is a very much a week by week, month by month proposition. And I'm really looking forward to hearing Fed, but more importantly, NFP this Friday, non-farm payrolls, and what the situation is as far as US leading into, of course, this Christmas season.
Yeah, and of course, the employment figures are going to be watched very closely as we go into next year. And, whether inflation, there's still a panic over inflation or not, that seems to be dissipating a bit. Peter, the markets can't work their way around gas quite as easily as oil in general. And just sticking to Europe on that front, everybody's in agreement that for this year, Europe's probably going to be okay. It's stored enough gas for what looks like a relatively okay winter, et cetera, et cetera. Next year will be the big one. We've got Germany, who's just secured a long-term LNG deal. But talk a bit about gas price outlook. We've seen, again, quite a range in the last 6 to 12 months. How's that?
Well, exactly. Oh, yeah, absolutely, Dyala. Well, yes, it's cratered compared to where it was a couple of months back, and we're all understanding that, and that's been just a big washout. And as everyone's saying, it's next winter is the real cause and concern, and where we move forward over the next couple of weeks as far as Northern Hemisphere winter. And it'll be interesting. I mean, people are telling me it's starting to get very, very cool, certainly across Europe and very much into the UK. And so the draw could be quite severe. And then we're looking at, the price. I'm just looking at, nat gas, and NYMEX nat gas is sitting at around about $7.12. It's been very choppy, down from those highs of $9. So when you're looking at all those different benchmarks, it's been an incredible, again, volatile market. We've seen corrections, and we've just got to see how that all plays into over this next matter of, I'd say, 4 to 6 weeks. You can get into February and you can have supply issues again. You could have weather outages. You could have all sorts of conditions, that the unknowns that can play into this market. And we all understand geopolitical sensitivities and the just the unknown that impacts energy markets. So I hope we get through with by the skin of our teeth. But I'm in Sydney and it's a warm summer here, and I wouldn't like to be in the highlands outside of Edinburgh trying to keep my house warm with a limited nat gas.
Yeah, and of course, Asia can also be very vulnerable to the other parts of Asia. Peter, let me just go back to you, talk a little bit about the US again, and I wanted to talk a bit about commodities and agriculture and other sort of commodity outlook for the year ahead. But SPR, we have an article in the bulletin today about what the US is going to do about its rebuying for its SPR, etc., with a $70 figure now being talked about yesterday by Amos Hochstein. Where do you think the US stands on that? I mean, there's clearly still movement for them to release reserves as well. So is the market taking that more seriously than it has been all year?
Well, it's new news, and new news creates interest. And when I saw it, I thought, well, it would have been a lot easier to do it when it was at $30, but they've let a lot out of the bag, so it's now at 70. And if they go down that pathway, that won't surprise me. So there's the first part, and I think that's what most retail traders would be taking on board, that there's a reason to do it, and it makes sense. And the second part of it is, where are we with crude prices? And maybe that's going to be that level and in that channel, as Clyde articulated, 70 to 90, and it could well fall in that. And we've just got to, again, see where we are over the next matter of months, and whether things derail. If they don't derail globally, as far as recessionary fears or really starting to bite in, or the tiger in the tank being inflation doesn't get tamed, then where are we sitting with energy prices? And there's just, I think, a lot of uncertainty across the whole complex, certainly with the foods, certainly with the likes of precious, and an unknown US dollar. So, it's very, very challenging for governments, and certainly challenging for traders. And that's why these short-term market movements have been so dynamic and so enjoyable for a lot of retail all over the world.
And I mean, with the Ukraine-Russia war sort of no end in sight, really, of course, there's been some victories on the Ukrainian front recently, but again, a lot of people dismissing those in the long term as not being, wow, that's quite a result.
Well, exactly. And
yeah.
No,
wow.
Sorry, I was just going to say, you said it is quite a result. Well, that tells you everything. I mean, that's the nervousness, and again, what Clyde mentioned as far as that strong demand, or what we've seen as far as November, is that going to be maintained in the months ahead? And again, the fragility, all I know is that their property sector is very, very tight. It's causing much concern all across mainland China, and debt holders are very, very worried. And if that does unravel, we've been saying that it's a work in progress. If it does unravel, and unravel badly, then that's really going to create much angst globally. And many, again, traders are looking at these signals to take a real deep appreciation as far as market sentiment and overall confidence across so many different asset classes.
Thanks, gentlemen. I'm afraid we've run out of time for today. We are actually going into a long weekend here in the UAE with Commemoration Day and National Day. So we will be resuming this program on December the 5th on Monday, which will, of course, be a big day, post-OPEC meeting decision and the day that the embargo hits. So a lot to talk about next week as well and look forward to. But yeah, absolutely dynamic times ahead. Thanks so much, gentlemen, and we'll see you in December.
Thank you, Dyala.
Very much for
Cheers,
joining us.
Clyde. Bye, Robin.
Thank you.